Welcome to Bears in Exile. Today is November 1st, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Okay, well, we had follow through today, which is fantastic. We were hoping we would get that, and sure enough, we did. Downtick yesterday has completely resolved itself. Who knows, maybe we'll even go over here to the failed downtick target uh, and see if that's taken out. But nonetheless, today, very, very good day. We can see that we're having some crossover in the short-term moving averages. Not much yet, but middle Bollinger Band looks like if we get another good down day, we're going to have the cross to where it will be above the short-term moving averages, which will be bearish. This was the first day of the month. We have, which formed our upper price consensus level way over here at the near the top from a few days ago, and we are closing in on the major price consensus level over here at just a hair above 11,400. So another 250 points to go, and we'll be at the mean. So that would be nice. That'll actually be would be a break of the long-term moving averages, and that will look really bearish. But it's early. That's 250 points away, and we were saying we're on the wish list was the previous low, but that it is not on the shopping list as of yet. So still waiting. Now, if this was a top, that's very bearish, because then we'll have a higher high and a lower high, and then we'll have to test the current low. That would be fantastic. I would just love that. But let's see if that is realistic. Certainly, with the downtick target already met and exceeded, it looks like a retest of the bar, what's left of the bar, the flatline bar, is in order. And since it is a flat line, it'll be easy to break. Beyond that, downtick on the CCI, almost getting to neutral. Downticks on the fast stochastic, slow stochastic, with plenty of room to move to the downside still. Notice the 14-day RSI moving average is leveling out, but we do not have the hook yet. But it is overbought, and fantastic. Downtick on the RSI, still in the positive, but very close to getting below the 50. Big downtick on the histogram, downtick on the MACD, looking for that bearish cross. So overall, definitely the daily is bearish, and certainly after 2 days like this, it should be. But how about some other time periods? Here's the 180, second most powerful chart that we look at. And we do have the cross of the middle Bollinger Band. It is above the short-term moving averages, which are getting expansion. Notice not full expansion prior to entering the bullish bar, but still expansion is good. Oversold on the CCI, oversold on the stochastics. Barely getting our downtick on the 14-day RSI moving average, making me believe that while we could have a reset of the stochastics, this is very bearish. And unless it were to turn back up, which would take some doing, we're in for some pain. Downtick on the RSI getting below the 50 once again. Downtick on the histogram, bearish cross on the MACD. 60 minutes has already broken through the bullish bar, middle Bollinger Band above the short-term moving averages. We do have some excessive separation and some wobble. CCI pretty low. Stochastics low, trying to work themselves out of it in the case of the fast. 14-day RSI moving average, still room to move to the downside. RSI very low. MACD histogram actually ticking up, MACD pointing down. Now, it is entirely possible that we are going to get some positive divergences since the move has been so great, and that's fine. Getting reset in the shorter time periods so that it continue continues on its move down is completely natural, and while down moves are more rapid than up moves, typically, uh, they're usually not just a rocket to the bottom. So it's all good. All good. SPX. We are, of course, below the upper price consensus level, below the 200-day moving average. We have exceeded the downtick from yesterday, completing it. We have more of a cross on the middle Bollinger Band. We could get above that tomorrow, closing in on the major price consensus level, not far away from it at all. Downtick on the CCI getting just below zero. Downticks on the stochastic. The 14-day RSI moving average is leveling out, but we do not have the hook. Downtick on the RSI, downtick on the histogram, downtick on the MACD, looking for the bearish cross. Essentially the same as the Dow, but better development with the middle Bollinger Band line. The VIX. Oh yeah, the VIX. Look at that sucker. Gapped way the heck up there. Gapped through the major price consensus level, got a spinning top, almost touched the upper price consensus level for this month, which is new, and backed away from it. We did close just below the lower price consensus level of the previous month. TCI high, stochastics going up, 14-day RSI moving average leveling out, uptick on the RSI getting into positive territory, uptick on the histogram, and getting the cross on the MACD. This does look good, although we do have a spinning top and a big old huge gap. So we want to see the stochastics get to the top. We want to see the hook on the 14-day RSI moving average, and we want it to begin its climb, at which time it will be all about the previous highs, way up here above 45 and halfway to 50. So very, very important and very good. TNA. Oh, we have a almost little gravestone doji, but we do have a little stub at the bottom. It did close above the major price consensus level, and we have exceeded the downtick target. Looking for a cross of the middle Bollinger Band, looking for a break of the major price consensus level. Note the 14-day RSI moving average getting almost just a breath away from 80 overbought. Stochastics turning down. The RSI itself, 14-day RSI leveling out. RSI ticking down almost past the 50. Downtick on the histogram, slight downtick on the MACD. Yeah, we have this. I guess we should classify it as an inverse hammer. Is that going to be enough to pause it? Maybe. Notice we still have the bearish bar in effect. Yes, it is taking damage, but it is still there, unlike the Dow, unlike the SPX, and so kicking it out is more likely with the Russell. And moving right along to UUP. Oh yeah. Notice the candle. We had that spinning top in the Russell. We have a hammer in the, or you could call it hanging man, same darn thing. Closed just below the major price consensus level. We have exceeded the uptick target. We have gone through, gapped through the bar, which had collapsed into a flat line. We are above the 200-day moving average. Woohoo! So now we need to see a strong green solid candle above the 200-day moving average to make it match the Dow and SPX. We do not want a failure and a break back through the 200-day moving average. That would be terrible. So hopefully we will not get that. Stochastics just flying. The 14-day RSI moving average leveling out. We do not have the hook. Uptick on the CCI, uptick on the histogram, uptick on the MACD, uptick on the RSI. RSI getting positive. So not too shabby. But this is a hanging man slash hammer. Is that going to have any kind of effect with traders that look at candles? Very possibly could. And if we have a side movement for a day or two, we want to stay above the 200-day moving average. Also look at the middle Bollinger Band, looking for the cross of the short-term moving averages, and that will be a tell. So very good, very good. Moving right along to the Euro FXE. Notice we have a inverse hammer. We did get below the major price consensus level for this month. We did close above the major price consensus level for the previous month. We are below the 200-day moving average. We were wanting a failure. We noticed or noted that when we got above it, gapped above it, we had a spinning top. We said we wanted a strong, solid, positive hammer if it was going to stay up there. We did not get that. Instead, we gapped back below it, and here we are. This is fantastic. The bearish bar is mostly gone, but there is still a little bit of it left. If it's able to reassert itself, that is fantastic. We have been saying that we did not expect the Euro plan to work, and certainly not on its essentially first attempt. So this is really good movement. Now at some point they will probably get it right. They will probably push something through, at which time the market will love it, the euro will go up, blah blah blah. But that time is not yet here. So downtick on the MACD, downtick on the histogram, downtick on the RSI getting into negative. Stochastics heading down, 14-day RSI moving average leveling out, looking for the hook. Downtick on the CCI, and of course that inverse hammer. Is it going to mean anything? Are we going to get a side tick? Is it going to slow down? It's possible. It should also be noted that for weeks now we've been saying that the euro should get to 1.35, and today it got into the low 1.36s. That is very encouraging. And back over here when it was 1.42, we were still saying 1.35. So this is great. This is good. Doing what it should be doing, and there should be more. I am looking for overshoot of 1.35, and perhaps if things get really bad and testy and risk off, a test of the previous low would be absolutely fantastic. But it is still very early for that, and it is on the wish list but not on the shopping list. So gotta break these major price consensus levels, and then it's really good. And at that time we should have the hook on the 14-day RSI moving average. So very important. And GLD, second VIX. Oh yeah, this one's making sense too. Nice green bar, and we've noted for a long time, gold is the second VIX. It goes up as the dollar gets weaker, but more importantly it goes up when fear increases. And the dollar is going up, meaning gold should go down, but fear is increasing, and we have a nice green bar. Fantastic. Short-term moving averages for the most part still pointing up, with the exception of the one on the fastest, the 3-day. And still flatline with the long-term moving averages. Note the middle Bollinger Band below the short-term moving averages, which should provide lift. We did close above the newly established upper price consensus level for this month. We're only one day into it. And downtick on CCI, downtick on stochastics, uptick on the 14-day RSI moving average, downtick on the RSI, downtick on the histogram, and slight uptick on the MACD. So you look at these indicators and you say, oh, down, 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 down. Oh, I'm sorry, almost down. With all these pointing down, shouldn't gold be getting hurt? Well, that's what the 14-day RSI moving average is all about. So it's pointing up and has a long ways to move. Now, if all of these were to march all the way down and they're able to push this around eventually and point it down, then yes, it should be in trouble. But for the moment, this isn't looking bad. It definitely should be looked at with some caution, but it does not look bad. SLV. Spinning top. We were expecting the test of the bar, and with today, even though we gapped down, that has been a good test of the bar. We got the short-term moving averages inside of it, and we did not achieve full crossover and separation prior to entering the bar, so we knew the odds were not that it would break through it on its first attempt. But since this is poor man's gold, and I guess almost the third VIX, this is not bad. And gap down, which normally is bad, met with a spinning top, meaning indecision, would make me interpret this as, is it the right thing for this to go down at this moment? Indecision. Is it indecision that it is failing from the bar? It's a heck of a lot better than a big red bar confirming that it is not time to break it. CCI pointing down, stochastics pointing down, 14-day RSI moving average pointing up, downtick on the RSI still in positive territory, downtick on the histogram, and a slight uptick in the MACD. So very similar to gold, but I still don't think that this is really a bad setup. Maybe it needs a little bit of time to hang out here at the bottom of the bar, but these will reset, and the 14-day RSI moving average is still marching up until it gets a hook, or it gets to the top and then gets a hook. I'm not overly concerned about it. That should help cushion any kind of down pressure. Notice the middle Bollinger Band below the short-term moving averages, which should also help to get some lift. But if we do break the upper price consensus level, if we break the major price consensus level, that will be a warning sign. Still, doing what it should do. And that's it for tonight. Looking for more tomorrow, looking for more Euro news. As long as we don't get some sort of quick fix for the vote in Greece, as long as that's going to go forward and the Greeks appear to have the option to get out of the euro, the downtrend should remain, and that's what we are hoping for. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.